If the debit side comes, it's a bank overdraft. We have taken the loan to extent offer. So payments are more. You have to prepare opening balance sheet or opening statement of a. That's a bear in mind. Credit purchase you calculated, capital you have calculated. Then and the cash transaction is given. You have to prepare the cash account now. Your opening debtor is this. Close 1,25,000 on 2%. Hello my dear student, I am Dr. B.S. Subramania. Call my name Dr. B.S.S. Professor in Commerce and Management, Vidhyaashram First Grade College, a Temple of Excellence, MYSURU. Today I am going to hand Financial Accounting 1, first semester BCom. The session goes in favor of accounts from incomplete records is nothing but single entry. Today we are going to discuss a good problem so that we have to prepare debtor account, creditor account, cash account, and also find out the trading and P&L account and the final balance sheet. Slowly we can go through this type of problem. They will ask for 15 marks. So we'll go very slowly. What are the things to be bear in mind? So when they have given here like this, Sridhar does not maintain his books in double entry system. From the following information, prepare the trading and profit and loss account and balance sheet. So in examination, no, when they given this is 31st December 2017, is nothing but 1/1/2018. Opening day. So when the opening day is given, you have to prepare opening balance sheet or opening statement of a. That's a bear in mind. So find out the capital, first point. Then, when the cash transactions are given now, you have to prepare the cash account. So, cash in hand comes on the debit side, collection debit side, payment credit side, rent credit side, salary credit side, sundry expense credit side, then sundry income debit side, drawing credit side, loan from Satish debit side, addition capital debit side, cash sale by making the sale, we are receiving the cash debit side, cash purchase credit side, purchase of furniture credit side. Then, so bad debt will come the debtor account and profit and loss account. Provide doubtful debts, it will come P&L account and the balance sheet out of the data that should be deducted. There's a problem here. So first we have to prepare. What we require is opening balance sheet you have to prepare. So balance sheet on 31st December 2007 is nothing but 1/1/2018. So what are the items given? See that. Go with. What is the first item? Stock. 19th is an asset. Stock. 19,800. What is the next one? Stock is over. Creditor will come liability. Debtor. Debtors. 1,11,800. So debtor 1,11,800. What is next one? Building. Building is an asset. Building. 90,000. What's the next one? Building over. Furniture. 11,000. Furniture. So, computer. 15,000. Then if you see your cash book now, your cash transaction 1/1 means beginning of the year. Cash. 15,000. Here, come back. Creditors. What's the value of the creditors? See that? 31,000. You add the asset. Asset minus liability is equal to capital. You must add the asset. When you deduct the asset, no, you will get the capital is considered. Add this. 19,800 plus 1,11,800, 118. This is 19,800 plus 111. 800. 1,11,800 plus 90,000 plus 11,000 plus 15,000 plus 15,000. 2 lakh. Here, open up 2 lakh. If you add all these figure now, 2 lakh 60. So it comes to 19,800, 15,000, 18,000. Come back, 19,800. Stock is 19,800 plus 1 lakh 800, 800, 800 plus 19,800 plus 90,000 plus 11,000. So if you add all these things now, it will come 2,68,800, 19,800 plus 1,800, 1 lakh 1,800 plus 90,000 plus 11,000 plus 15,000 plus 2,62,200. Here, what are the items are? See that? Check this. Stock 19,800. Then 1,18,000. Here 1,18,000. This is 1,18,000. 1,18,000. Building 90,000, 11,000, 15,000, 15,000. If you add now 2 lakh, if you add this 19,800 plus 1,1830 plus 90,000 plus 11,000 plus 15,000 plus 15,000, 2,68,800, 2,68,800. Your asset total. Deduct 2,68,800 minus 31,000. 2,37,800 will come. 2,37,800. This is the capital. So assets minus liability is equal to capital. That we are going to calculate over. Now, debtors account you have to prepare. Okay. To balance brought down. We start with the opening debtor, then to credit sale by cash receipt from the debtor, by BR receipt, by cash account return, by bad debt, by sales return, by discount allowed. That we have to learn. To balance brought down. What's your opening debtor? 1,18,000. Any credit sale is there? See in the problem. Any credit sale, cash sale, credit sale is not there. Cash receipt from debtor, you have to see that. Collection from debtor, 1,60,800. By cash account, 1,60,800. By cash account, there is no BR. By bad debts, I think this is in the adjustment. Bad debt is 1,200. Closing debtor, balance carried down. What's your closing debtor? This is opening debtor. This is closing debtor. Closing debtor, 1,25,000. add the figure. 1,60,800 plus 1,200 plus 1,25,000 minus 118,000. So 1,69,000 is there. So this is add 0, 0. 2,87,000. 2,87,300. 1,69,000. This is your credit sales. So whatever the difference come, that is the credit sale. So your debtor account is over. Go to the creditor account. By balance, we have to learn the format very well. Debtor account, creditor account, cash account, statement of balance sheet. By balance brought down. What's your opening creditor? I think it is 31,000. Your opening creditor, 31,000. Here, debit side, 2 cash paid to creditor. How much will come? Payment to creditor, 1,44,000. 2 cash paid to creditors, 1,44,000. See that? Payment to creditor is 1,44,000. Any discount received? Any purchases returned? No. What's your closing creditor? See that? Opening creditor is 1 lakh. Opening 13. What is closing creditor? 14,500. 2 balance carried down. Closing creditor. Your opening 31, closing is 14,500. $1,58,500. 1,58,500. 0,0500. 1,27,000 credit purchases. So we have calculated. One, we have calculated the credit sale. You have calculated credit purchases. We have calculated 1,27,500. You calculated what's called credit purchase. You calculated capital. You have calculated. Then and the cash transaction is given. You have to prepare the cash account now. Opening balance, 2 balance brought down. I will explain. Go to cash transaction. So what's your opening balance? 15,000. 15,000. Then see that any receipt from the debtor. Collection from debtor, 1,60,800. Debtor, 1,60,800. Receipt from debtor. See that? This over. Payment to creditor, 1,44,000. By creditors, 1,44,000 payment made. Then see that. What's next one? This over. Rent and taxes, 11,500 paid. Rent and taxes. Rent and taxes we paid. Rent and taxes we paid 11,500. All payment. What is next one? See that. This over. Salary paid 60,000. Salary paid. Salary 60,000. expenses paid, sundry expenses paid 18,000. Then receive the incomes we received, sundry income 16,500, sundry income 16,500. Slowly you have to go. Sundry income is over. Then draw the money 30,000. Drawing 30,000. Draw the money 30,000. Then see that. What is next one? Drawing's over. Loan from Satish. Drawing is over. Loan from Satish 23,000 we received. Loan from Satish 23,000 received. All receipt will come on the debit side. All payment will come on the credit side. Then see that. What is the next one? Then additional capital introduced 12,000. Additional capital 12,000. Additional capital 12,000. Then this over. Then cash sale. By selling the goods, you got how much money? Cash sale 11,500. Cash sales. By selling the goods, you are receiving the money 11,500. So this is over. Like cash purchases 15,000. When you purchase the money, cash purchases 15,000. Then we purchase the money. Then purchase of furniture. Asset furniture 500. If you look after, debit side is more, 1,44,000 plus 2,79,000. 2,79,000. Out of that, deduct minus 15,000 minus 1,60,800 minus 16,500 minus 23,000 minus 12,000 minus 40,200. Balance carried down. Bank overdraft. So if the difference comes to credit side, then it is a by balance brought down. There is a closing cash. If the debit side comes, it's a bank overdraft. We have taken the loan to extent of it. So payments are more, receipts are less. So bank overdraft to extent of 40,200. Now we have prepared debtor account, creditor account, statement are prepared, cash book has prepared. Now we have to prepare just like ordinary trading and profit and loss account. Cash account over. We'll go to trading and P&L account. So first starts with 2. Opening stock. See that what's the value of the opening stock? Stock 19,800. First we write opening stock 19,800. Then 2 purchases. In your cash transaction, you got the cash purchase. See that your cash purchase is 15,000. Then you find out the credit purchase Here, cash purchase 15,000 plus credit purchase plus credit. If you go to creditor, you can understand. Creditor says, creditor account, what's a credit purchase? 1,27,500. 1,27,500. Add the figure. This is 500. 1,42,500. One cash purchase, one credit purchase. Come back here. By sales. Find out any cash sale is there. Here, if you cash sale is there, how much cash sale? 11,500. Cash sale, cash sales. 11,500. Credit sales. Go to debtor account. Debtor account. What's your credit sale? 1,69,000. 1,69,000. Add the figure. This is 1,80,500. Then by closing stock. If you see, first beginning, you can find out. Stock 1,13,200. 1,13,200. We'll see once again. What's your closing stock? You'll see that. Here stock 1,13,200 is there. Add the figure. If we add now, it is 2,93,700. 2,93,700. Out of that, 2,93,700 minus 19,800 minus 1,42,500. So it will come, if we bring out the difference, 1,31,400. 1,31,400. 2 gross profit carried down. 2 gross profit carried down, 1,31,400. So by GP, gross profit brought down 1,31,400. Now all the expenditure have to be debited. It's a nominal account. All the expenditure has to be brought down now. You'll go with one expenditure. Here, rent and taxes, 11,500. Rent and taxes, all expenditure, 11,500. Salary, your salary, 60,000. 60,000 salary is there. So all the expenditure has to be debited. Then income should be created. What's the next one? See that? Salary over. After the salary, you have got expenditure. How much? 18,000. Sundry income 16,500. Expenses 18,000. Sundry income. Sundry income is there. What's your sundry income? See that? Sundry income 16,500. 16,500. All expenditure have been debited and the income has been credited here. All expenditure. Any more expenditure? See that? So what is this? Drawing won't come. Then loan from Satish, addition cash, sale over, cash purchase over, furniture, go to the asset side of the balance sheet. Then you have got a bad date. You got a bad date now. Bad dates. What's the value of the bad date? Here, see that. What's a bad date? 1,200. 1,200. Your bad date is 1,200. plus new RBD on debtor. New RBD on the debtor is considered. What's your closing debtor? Your opening debtor is this. Close 1,25,000 on 2%. 1,25,000 on the 2%, because 2% you have calculated on the opening debtor, then it will come 2,500. It becomes 3,700. Any depreciation is there? See that? I think there is no depreciation. We'll bring out the reference. Add the credit side. If you add the credit side, no, it will come 1,31,000. This is 0. 1,47,900. 1,47,900. So bring out the 1,47,900. Bring out the reference. 1,47,900 minus 11,500 minus 60,000 minus 18,000 minus 3,700. So it will come. So will you bring out the difference? It will come 54,700. This is the net profit. So just like ordinary trading and P&L account, so net profit is 54,700. Now we'll go to the balance sheet. All final balance you have to go now. We'll go with one by one. See the work. What's your closing? First we'll go with the debtor. Cash is not there, becomes the overdraft now. Debtor. We'll go with the debtor. Balance sheet. Debtors. 1,25,000 minus new RBD. 2% you have been made. 2,500. 1,22,500. What's the next asset? See that? So debtor over. Then building. Debtor over. Building 90,000. Building 90,000. What is the next one? After building, see that? Building over. Then furniture, 11,000 plus 500 purchase. Furniture. 11,000 plus 500 purchase. 11,500. What is the next one? See that? 11,500 purchase. So computer 15,000. No cash is there, becomes the overdraft. Come back here. Creditors closing. What's your closing creditor? See that? 14,500. Then bank overdraft. In your cash book it is there. Balance. What's your cash book balance? 40,200. Then capital. First you have find out. What's your capital? You have prepare the statement of assets now. First opening balance sheet. 2,37,800. 2,37,800 plus net profit. What you are arrived now? 54,700. Add 2,92,500. What's your drawing? See that? Drawing is 30,000 minus drawings 30,000. It become 2,62,500. There was no outstanding. There was no outstanding wages, anything. 2,62,500. Loan from Satish. Here, some loan is there from Satish. See that? Loan from Satish, 23,000. Then addition capital, 12,000. Loan from Satish, 23,000. Plus additional capital, 12,000. So these are the figures you got. Everything then. Closing stock. Not the closing stock. What's the value of the closing stock? 1,13,200. 1,13,000. Closing stock. Add the figure. 3,52,200. So it will tally for 3,52,200. So what are the procedure? If they give the opening balance, you have to prepare the opening balance. If they give the cash transaction, you have to prepare the cash book. Debtor and creditor account is a must. Then you go with the trading account, profit and loss account, and a balance sheet. Very common, you have to do each. So because you must have a patience, first you have to, if you give the opening balance, you have to prepare the opening balance sheet. Then you have to prepare the debtor account, then creditor account. If the cash account is prepared, if the difference comes to credit side, it's a closing cash. Debit side comes, it's a bank overdraft. Then enter trading and P&L account and a balance sheet. Slowly you have to do, but problem is lengthy but easy. Hope you have followed. I have prepared debtor account, creditor account, cash account, statement of opening balance sheet and closing balance sheet, just like a trading and P&L account. In the next class, we'll have some more problems on this type. Till then, meet in the next class with another problem.